Hey folks, welcome back to another live stream. So before we begin, I just need to check that everything is fine, like my voice and other things. Right, right, I'm live. But I cannot hear myself. Let's see. All right, the voice is also fine. Let me share it. So now join fast, guys. We have a lot of things to cover. This live stream would be gold for you guys because I'm going to share a lot of things that would help you guys for your own trading journey. All right, all right. MD Sahed, hello. Hello, bro. How are you? So, oh, yes, I was a gamer before. I hope you are one of my subscribers when I was a gamer before. You are welcome, brother. Yes, this was my FF channel. So I just left Free Fire and get back into my trading stuff. So that's why I share things. Do you trade or do you just play games? That's nice, but do not reveal that on comment section. If you have my number, then maybe I know you. What's your name? Yeah, that's what I'm saying. Like, if you have my number, then I do know you then. It's okay, it's fine. Rambo, Rambo. Maybe I cannot exactly remember because I have played with a lot of people, Back in that time, I was a quite good player. I'm not, don't want to say that, but I used to play a little bit good, I guess so. So I have played a lot of people, YouTubers, and bunch of that thing back then. I have enjoyed that. Raja Sekhar. Hi Raja, welcome back to our live. So as I said on my Instagram that I would share my full plan to get to $1 million from trading. and the full strategy behind the mindset and the whole game plan. I would share that today here. So this is going to be very gold for you guys. So make sure that you watch till the end. And we will start in few minutes. Just wait for some others. Yes, that's what. I got you, bro. You still play Free Fire till now? Like it's been a lot of years now, more than 6. I played almost like 4 years back then. All right, all right. So, should I start, Raja? Because it's been 5 minutes. Okay, you just played gradually. It's okay, fine. The game was interesting before, but we grown up now. We have something else to do in life. It happens a lot of time. Now I should begin the whole plan. You can watch if you want to know something about trading. It's up to you. Okay, let's get started. I'm not watching comments anymore. Let me just open the script so I go accordingly structure. So I'm gonna discuss at first about that funds, like what at first we should target, uh, and then how should we scale and the whole plan of scaling. All right. So we are going to start from the very small capital, which is $10,000. Quite 8 lakhs in Indian rupees, but in dollars is 10,000. This would be our first milestone to get there. It is literally so easy. Uh, I will just show you. Second, it would be $100,000. All right. And our last milestone, like I would scale more than that, but I'm choosing as a 1 million for a reason. I would explain. Mm, all right. This is 1 million. So we can scale to 10 million or even 100 million, 50 million like that. But in the beginning, as you know, guys, I'm 21 years old. So our goals should be realistic for now, actually, what we can do. So at first, our goal is to get $10,000. Why is that? Because this is the minimum amount you can make. Like if you imagine a realistic uh, income from that, like very pretty low, we can make around 3 to 5% a month, which would be on a $10,000 account, possibly 300 to $500. Now, this is not much money, But if you live in India or somewhere in the Southeast Asia, sorry, then it's quite enough to live. Like you can live two or one or two people easily can live with this money, cause we have a great advantage of that. Like the things are very cheap in India, so this money is enough for to live your expenses and pay your bills. All right, that's why we started with $10,000. So this is pretty much basic amount, like 3 to 5%, like anyone can make it if you are profitable, have been experienced in trading. All right. So on, and if we still assume that same, sorry, same thing on $100,000, it would be somewhere around 3,000 to $5,000. Now, this would be a very a lot of money. You can live like rich in India or neighbor countries like Nepal, Bangladesh, Bhutan, or Pakistan, or even like Indonesia, Thailand. These countries would be great for to live in with this amount. But this is not much money. If you compare it with a 9 to 5 or a worker who lives in United States or somewhere in Europe, then they're pretty much they are making this money. This is average amount. This is not much. So $100,000 is not much if you're living in Europe or America that side. Then it's pretty basic income like $300 or $500 in India. All right. Now in 1 million, that's a pretty good amount if you consider it. That would be 30,000 to $50,000. All right. So now things are more serious. Like now this amount is pretty serious amount. Like you can have a really good life with this amount. Literally, you can travel to anywhere in the world and live off there without thinking about the cost. All right. So this is why my target is 1 million. Of course, we can scale to 10 million, 50 million, or even 100 million, but that's even more later on our career. But in the very beginning of our life, where things change, is like $10,000 can make you pretty much your bills. $100,000, you would be traveled to good places. You can surround yourself with a good people, and 1 million is a pretty much good amount that you can travel off anywhere in the world. So this is why we our milestone is 1 million. All right, I hope that helps. And 3 to 5% is pretty realistic. You know, this is not that much. Even some people even risk 3%, like the gamblers obviously, on a per trade. So this is not much. So that's why I say like your mindset should be on being a professional instead of just randomly trade and hope for profit. There should be a risk. Perfect. All right. Someone message on Discord. Let me check it. Sign is saying to join. All right. So I'm on DC right now. Well, I'm not seeing the comments, guys. because I'm explaining everything. So now you get that why 1 million is our target, right? So our next topic would be um, risk management. And I'm going to share a very good risk management that would help you guys even better than most other professional traders. All right. Before that, let me check the comments that if you have asked anything. Uh, if you have time, you can quickly recap the day one. We didn't share anything in a day one. I was just trading because that was because I was in the first beginning of the day. I just entered a trade very early, so I had no possible reasons to do the live. So it was 10 minutes. The second official day that I did live, um, I just traded that with nothing else because there wasn't a lot of people I didn't share anything. So this is why I'm doing it lately. So anyway, this is the information. All right. I can find your Instagram. Can you please mention it? Yeah, sure. I can mention it. Yeah, you can go with 5K. I'm not saying that go with a 10K starting or not like that. When you practice on your demo, you know that your things are working. You know that you're confident that yeah, you can do it. Then you go for 5K challenge, you make it, then you're pretty sure that you can make it. Till after that, you don't have to look back that day, right? So you can go for 10K or even just scale it, right? So that's what it is. The second thing, so I'm going to start, so pay attention. This can be a little bit complex for you guys, but I'm going to share it my own risk management and why I think it's best. All right. So as I told you to risk 1% if you are confident with your model, only win 1%. Otherwise, this can blow your account. This is big enough risk to blow your account. All right. Cause in prop firms we have only 10% drawdown. Let me just mention it. We have max drawdown.
Share correct screen.
I cannot share, sorry. I cannot share the screen here, bro. I'm live on YouTube.
You can do both now.
I'm not trading, by the way. I'm just sharing that the whole strategy or plan to get to 1 million.
Okay, but why you can't share here?
Because there is no reason to share because I'm not trading. You can just watch on the YouTube. I think that even helped me get more watch time. Just get
Watch
there.
time.
Yeah.
Okay.
Yeah. Okay, I'm turning off the mic. All right. So where we was, yeah. So our max drawdown is 10%, which is low enough for a beginner to lose. Like if you risk 1%, 10 trades, that can happen. Like any beginner can lose their account. So I do not recommend you to risk 1% if you are your practice time or like in the very beginning of your development of your trading journey. All right. So But if we talk about you know your model, you have back tested and you are confident, then you can risk 1%. All right. So if we cap our max trade amount to 10 trades, I think this is pretty good amount to make profit. 10 trades per month. All right. Now for a beginners, it might seem very less because they take 3 to 5 trades a day. So 10 trades makes no sense for them. They think like to make a lot of money, they have to trade a lot. And that's not reality. I'm going to show that. So if we are risking 1% taking 10 trades and our RR should be 1:3. Why is that? Because this is a pretty good sweet spot for a beginner to being profitable with low accuracy, right? So if you know your model, you have tested, so at least you can get 4 trades win. Like if you even flip coins, you can get win multiple trades by flipping coins. So if you know about your stuff, you know what you were doing, then it's pretty obvious that you can win at least 4 out of 10. So one trade can give us one winning trade would give us 3% gain because we're risking one to get 3%, right? So if you're imagining 4 win hypothetically and 6 loss, then 4 win total give us uh 12 12%, and 6 losses would give us 6% loss. So if we minus that, total would be 6%. Let me just write it down. Net gain total monthly. It's positive 6%. All right. Don't think minus. All right. So it's falling into our this. So that is why I said like 3 to 5% is very good return monthly. Like it's yearly, almost like 40 to 60% annual. So like hedge fund level returns. Your bank gives you 6 to 7% on FD. So you were making 3 to 5% a month. That's way, way much more. All right. Of course, we can over the time when we would have more experience, we can target more higher RR like 1:5, and our win rate can grow to 40% to 60% or even 80%. So there would be even more easier for later to get 10 to 15% or even 20% realistically. And that would be sustainable, not like you are making this month but not next month. So this is what it is, RR. But risk management I'm sharing with you is It's a rule-based risk management, all right? I found out it almost like a month ago. Yeah. So we would be risking 1%, as we said, and 1:3 would be our RR. So if we even win four trades, then we would be making 6%. But here is a twist. Like if we start off $10,000 and we risk 1%, which would be $100. I guess so. Uh, yeah, it's $100. So we have we are risking $100 to get $300 a trade. All right. So if what if we lose? What would happen? If we lose our first trade, then there would be rule that we would be cutting half our risk. What does it mean? We're risking 1%. If we lose that $100, then our next trade would be $50. Why? Because half of that 1%, which is 0.5% risk. Now I'm going to explain like why should we do that and how that's going to be better than other risk management. So, um, let me just keep it aside. This is initial balance. There's a lot of mess. All right. $10,000 is the initial balance we are starting off. All right. 1% risk, first trade goes loss. Second trade would be 0.5%. So if we win and our RR is 1:3, then how much would we win? Three times of this risk. That would be $150. Sorry. Right? If we win, then our loss would be recovered. But what if we lose again? I just copy it. Total loss of $200. All right. So if we win, then we are covering $150. Then there would be 0.5% we are in drawdown. But what the advantage of doing this strategy? Like when you are below this initial capital, you would half your risk, so you can survive more trades than as usual. Like if you're risking 1% all the time, absolute 1%, then you can max trade, you can take like 10 trades because there is 10% drawdown rule. if you count every single trade loss, then so you can take 10 trades max if you're risking 1%, right? But if you're risking half of below the initial balance, then how many trades can you take? More than this. Not double, because our first trade is 1%, but it's more than this. So it would be like uh 18. Yes, you can take 18 trades. I guess so. Like 10 is 20. Yeah. You were taking 18 trades then. If you're using this risk management, right? So you can survive more drawdowns than the trader who is risking constant 1% risk. So like if he lose 5 or 6 trades, then he already lost 6% of the capital and left only 4% drawdown. So he would be in mental pressure. But if you lose 6 trades, how much would you lose? 1% in the beginning, second 2 trades, one more 1%, 2%, 3 trades, and more three would be 1.5. So 2, 3, 3.5. So in 3 trades, you would be losing 3.5% drawdown, where that trader would be losing 6%. Now tell me, who can take better trades? Obviously this person, because he has less pressure to lose the account. He has more pressure. Like he would be thinking, am I losing? Can I keep this account? And can literally ruin his um, profession of trading by revenge trading or even FOMO, fear, greed, or whatever. There are a lot of emotion we humans have. So this is this risk management keeps you optimistic when you are losing a lot of trades. You can take a many 18 trades. So if you were capping your max trade 10 trades a month, then you were only losing very less than this one. It would need literally 2 months to lose the account. So I think it's a lot of time to keep the account. So if you could still lose, keep losing on this, blow your account, I think you seriously need to work on your strategy and thing. So there's no need. So that's what I'm talking about. So if we have 6 losses and losing 3.5 and 2 win, uh, yeah, 2 win can cover our almost half the risk, right? This is 1:3 of 0.5%. So 2 win can cover our 3% and 0.5% another trade. So if we are having 4 trades, this is a little complex. If you don't understand, let me know, okay? 2 wins can give us 3%. Why 3%? Because we're risking 0.5 now. That's why. And the next 2 wins, we have still have 0.5% drawdown to recover that another 0.5% trade would give us 1.5% win. So when you have three wins total, three wins, then we would be 1% positive. Our balance, would be 1% positive. Now we already won three, and the last trade, the fourth trade winning, as we discussed earlier, that would be our $300 because we're again risking 1%, and according to our RR, we'd be gaining 3%. So last trade would be $300, right? So total, we would be making $400 over the time. Now, we did made a little bit less, but we can survive more drawdown than this trader. I think this is more better because if I can the drawdowns, which ruins people, then what else is stopping us? Nothing. I'm happy with 4% in return. I'm happy with 4% of this account that can pay my bills, this account and this account, all of that. And I'm talking about the very beginning of my journey. So I hope you understand, but just let me know if you do, then we would move forward to other thing. So we need to cut off our losses so we can survive loss days and win more when we are winning. That's the game, simple. When you are losing, lose less. When you are winning, win more. That's the simple math of this risk management strategy. Let me know in the comments that should I jump to another topic. Guys, let me know if did you understand this risk management, or should I explain it once more, or should I jump on the next topic? Okay, so I'm going to next topic. Guys, let me know. Did you understand this risk management, or should I? So our next topic is discipline and psychology. All right. So I'm just removing all this and clean a little bit. If you want to take a screenshot, you can rewind the live stream and get a screenshot. All right. Yeah. Now it's clean. So I'm now talking about discipline at first and why is it important and how that can help you more. So as we discussed that taking only 10 trades a month, right? This is pretty much low for a beginner, as I myself used to trade 2 or 3 trades a day, literally. I used to gamble in the beginning, as everyone does, try to make money from it. That's all. So you're taking 10 trades. So as I told you, if you even flip coin, then you would win few of them, right? So if you know what you are doing, so it's obvious that you can win at least 4 trades. And if you realistically see 4 trades, we have 4 weeks. We have 4 weeks. Each of the day, I'm not counting Monday or Friday because those are the worst day for trading. You can trade, but not usually you should. There is a reason I would explain. There is quarterly shift and a lot of advanced things. We know I do have on my Discord share this. Just let me show you. Um, I have this quarterly shift. I know which days does what. All right, I would make this public for later, but this quarterly things I know when price is going to range, when price is going to move, and all that stuff. That's why we are only counting 3 days a week tradable. So if we count 3 days, like 2 to 3 days, if you take trades, and that would be in a month, like for 8 to 12 days, right? So if you're trading 8 to 12 days, like I mentioned, 2 to 3 trades a week, and monthly would be 8 to 12. So you're trading 8 to 12 days monthly. So it's pretty obvious that you can at least get one good setup that would hit your 1:3 TP. One single good setup in a whole week, right? So it's more obvious now to get 4 wins. If you even get one good setup a week, one only. So it's obvious that you are getting 4 trades, 4 winning trades, right? After getting that 4 winning trades, if you can control your maximum trades, like if you got to win 4 a month, you know that you can get at least 4 wins and lose less. Like if you are trading, taking 6 trades, sorry, 6 losses, then we would be making 6% with a 1% straight risk with a 40% win rate. But if we're taking that dynamic risk, cutting off the risk in half, then we'll be making 4% a month. All right. But if we cut off that 6 to 4 trades, 4 losses, then we'll be making even more. Right. So this is why discipline is important. Like if you even flip coin, you can win 4 trades. If you only have one winning setup a week, you can still get 4 wins. So there is no reason to get that setup a week. All right. So if you cut off your losses, that's where you can make more money. Not by winning, but by less losing. Right? How can you make it? By knowing when to manage your trade to break even, when to trail your stop loss, and all that stuff. And when you should just wait and watch instead of entering in the market. That's all. That's all discipline. If you're not seeing your setup, do not trade. You can get one good trade a week. It's obvious, right? This is why discipline is important. You understand? Our job is to cut off losses. That's all, nothing else. That's all. Rest of the thing price will do. Price will hit your TP, not you. The only thing you need to control is your losses and yourself. Like, you're not going to trade. You're saying price to do this. You're entering. You're saying price to do that. You're entering. Not like that. You cannot enter trades like that. That's why. Now, I hope this is clear. This is obvious to get 4 opportunities to win a month. It's obvious anybody can do it. Then I would talk about psychology that you have been heard of a lot of time. That was even confusing for me in the beginning. Like, what is it psychology and how I can develop it and all that? Because a lot of people, even before exploring ICT, I heard that. So I'm going to talk about what is it and how you can develop that faster. All right, should I jump on it or do you need to talk about this or anything back earlier like risk management or anything? Let me know in the comments. I'm checking. And don't forget to drink water. Hydration is also important. Comment fast if should I explain what the psychology is and how you can develop your. Explain it. I explain what the psychology is. Next topic. All right. Let's talk about psychology. I'm removing it, okay? Trading psychology. So, yeah, as you guys know, as I myself are intraday trader, I trade specific session of a day. So that's why I'm called intraday trader. So there is multiple types of trading styles like swing positions, day, intraday, scalping, a lot of bunch of things. Depending on your personality, your trading style would be up to you, all right? So as I am an intraday trader because that suits my personality, so I'm talking about that. So if you know this is market structure, right? I hope you're familiar with. If you are not, then you should definitely learn from ICT or either wait, I would explain later. I'm showing it here and then I would give you live examples of psychology. So if we divide that the whole trading day, that would be Asian session, then would be London session, then would be sorry, New York session. All right, that's all the session we know about. So what is psychology? Psychology and how we can use it for our thing, and this is the most important thing. As we used to heard that psychology is 80% and anything else is 20%. So that's what. So when as you know, I trade New York session. So what should be my psychology in New York session and how that's going to help me? So thing is, we open market at somewhere and price moves. All right. So if you're familiar with liquidity, let me just draw it then. Buy side liquidity. All right. Yeah. So we know that market is going to take out this liquidity, right? That's where our objective is. All right. So what is psychology? Psychology is future projection, that not where market is going. Like psychology is not like you're predicting the bias or the direction of the market. That's not psychology. Psychology is how price is going to get there. Like if we are aiming for that price should reach for this liquidity, then we should know like how, right? Price can go from here to here on that Asian session. But if it choose to not go, then we need to know like if price did this, then it should did this in London session. If did this in the London session, then we should know in our trading time what price should do. That's what the psychology is. Like if we have accumulation or range in the Asian session, let me just remove it and give you an future projection. All right. So if we are having range and in Asian session, and we know that today price should take out this high or buy side liquidity, then what we would um, expect in London, we would be expecting to take out this low. Why? Because to fill the order, like there should be someone to sell in order to buy. So people stop loss here who try to get an entry to catch the trade, they would be stopped out, manipulation in the London, and then breakup structure. All right, this is the psychology. Let me just drag it down. Yeah. So if we build up the liquidity, engineered liquidity in the range, and price drive lower, there are traders who would be seeing it as a breakout in the sell side. They would be going short, all right? Or even people who have long there, their stop loss would be below there. So there would be a lot of sell orders, right? So the smart money or big players would use that sales. They would buy that at low price and do what? Sell that at a high price. But that's not what I'm talking about. I'm talking about psychology. Like if price taken out that low in the London session and broke structure here, now we know that the market is going for what? There. We know the direction. But what it should do in the New York session, it should retrace a little bit. It should retrace, then continue. Right? That was the psychology. It's like we know that what price leg, we call it leg, is going to fall into our trading specific trading time. So if I'm trading London session, I know that there is accumulation or range, what price is going to do. That's the psychology. I know it's going to there at the end of the day here, but what it's going to do at this specific time. of my session, right? Now you might question that how would we know what it's going to do? Yeah, we do know because I have a lot of bunch of things here. This is price delivery. What price should do after that? Expansion, consolidation, range, expansion, big moves, retracement, you know about that pullback, and reversal, price reverse. It cannot go outside of that. So there is a lot of thing we know about if we deep down into ICT. So that's what builds your narrative or psychology. So let me show it on the chart. So this is Euro USD. So it market opened, gap up. All right, let me just remove it. Market open, gap up. What it did, take out the previous day high, right? I'm using 15-minute time frame, by the way. I would tell you that why 15 minutes is good, but understand this. It gap up, take out this highs. What it did, take out this buy orders, and they sold. They sold at higher price to the retail or whatever, whoever trading the long here. All right, it gapped up, get back into the range, take out this low, and what it did, break up structure. What it did, confirmed it's going to sell side. Looking for what? Back into the range. There is a range back into this and taking out this low. All right. So if it did this and did also the uh, breakout structure in the sell side, and then it retraced it, then what can we expect in the London session? Obviously continue. It retraced, so we expect continue, and that happened. Exactly, that happened. That what the psychology is. You know that what is price going to do in your specific session. If you're trading London session, then you should build your psychology based on the previous sessions like this. In previous session, it did a market structure shift and retraced before the London opening and then sell off. That's what psychology is. You would understand what price is going to do in your specific session. That's what is it. That's what narrative is. I hope you understand. Ah, did you understand? Then I would go explain why 15 minutes is very important. Let me know, boys, if you did understand it. It's just a narrative that what price is going to do. If you know what it's like, how, if you know that price is going to take out this low, you must know that how it's going to take out. That's what it is. Not much. This is not complicated. Okay, so now I'm going to explain why 15-minute chart is very, very important. So time frame we choose. Let me just clean it once. All right. Yeah. So does time frame matter? No, it doesn't matter. If you are understanding the chart and the narrative that how it's going to do and where it's going to do, it doesn't matter. But it helps us 15 minutes. Why? because in 15 minutes we can see past 1 day, 2 day, 3 day, 4 day of data, or even many more, but that's not clear. We can have clean 4 day of data. That what matters. 2 to 3 or 4 day of data can give you to knowledge about what price is going to do in intraday time frame. Like if I'm seeing that we have yesterday high here, it take out that high, then I know, and did a breakup structure in the sell side, I know what price is going to do in this specific session, London session. It's actually key skill zone, not session, all right? So if price retraced there and did what, I know what it's going to do in New York kill zone or session. So that it makes easy at 15 minutes, but you can use 1 hour too for a narrative. It should be on your understanding. Choosing time frame should be on your understanding. If you're understanding on 4 hour time frame, it up to you. It doesn't matter. You if you understand on daily, it's up to you. It's doesn't matter. But I don't think the more than daily is important on your 5 minute or 1 minute entry. So 15 minutes is big enough to look back previous 2 or 3 days data, and small enough to get an precise entry on the specific time, like 3 hours in a kill zone in a session. So that's why 15 minutes work perfectly, but you can also use 1 hour, but it works based on 15 minutes. But if you go on other asset like gold, then it depends. Like if you're understanding on 5 minutes, then it would be better. If you're understanding 15, better. 1 hour, depending on you, that what you're understanding. All right. Did you understand? Let me know in the comments, and then going to next topic. We already covered a lot of important topics, and it's now about tools and things I would talk about. Like which platform should you go for, which pair or asset should you trade, and all that. There would be backed reason, not like random suggestion. All right, let's go. Let's do it then. Mm, let me just check it once more. Let's do the pairs at first, because this is more important, I think. So as you know, I have 3 pairs: USD, Nasdaq, and gold. And there is a backed reason behind it for each of them. But if you were trading in the very beginning of your trading development, then you should only trade one pair, only single one or two. Two doesn't mean two different pairs. It should be like Nasdaq and S&P 500, because these two are looks the same, or Euro USD and GBP USD, that also looks the same. It should be like that. All right. If you're in the very beginning of your journey, like you are developing your profession, then you should go with one. Why is that? Because if you're managing fund, like it's literally the same thing. Like you are getting funded. Let me just search. This is my favorite platform. You doesn't have to buy accounts from this, but this is a good platform. One of my favorite. Sorry. So if you were having a platform, what you were doing? You were managing capital for a funding, sorry, in private investment company. This is what they have their investor to put money and they just give it to you to manage and make profit from it. That's all. So you should be professional or even hedge funds, banks, no one trades multiple things. Like I do, this is pretty unprofessional, but I have a back reason. But I would explain that before I'm explaining that why you should trade only one. So you can have your mastery. You have to master at one thing. And Euro USD is pretty one of the best pair because it has the highest liquidity, like $1.2 trillion per day traded. So it's more than any GDP of many countries. So this is very structured, less manipulative if you know how things work, if you know the technical analysis, then it's pretty easy. And otherwise, if you have experience, you can go with Nasdaq. This is also very technical, like mechanical. It works very well with ICT approaches. But this tour based on EURUSD, you can trade London session. It works good on London and also New York session. Nasdaq is very good right after 9:30 open, which is 7 p.m. Indian Standard Time. And gold is you can trade literally any session. That is why gold is very dangerous. So my suggestion would be EURUSD. This is the best easy pair to get mastery on. That's why. And if you wanna have one more pair, then you should go with GBP USD. This is the reason. Now, and if you trade different sessions like Asian sessions, then you should have USD JPY or any other pair, you know. So it should be depending on your trading time. All right. So behind the reason of my self choosing three different pairs with three different nature and like personality is I choose Irreversible because it's the most beautiful pair works the price. I can literally see no manipulation in there. Like I know where the price is going. It's pretty easy. That's why, you know, I can trade. The best time would be trading Irreversible is London session and New York session. Now the second pair Nasdaq, I have it because if USD is dead, you know that Forex and community is based on USD. If this USD doesn't move, then gold and Euro USD or any Forex pair would not move. So if we don't have any setup on that, then we can look on Nasdaq because Nasdaq is not correlated with Forex or commodities. That's why I have it. That is the reason behind it having it as my pair. And I have gold, as you know, in the very beginning of my journey, I used to only trade gold, nothing else, only one pair gold. But I'm switching to other pairs because it is very dangerous in my personal experience, and any other professional trader would tell you. But if you're good at it, then you can trade it. By the way, I like gold because it you can literally find moves any session, like London, Asia, New York, even late night New York, like New York PM session. So that's why, like, if I travel to anywhere and the time zone doesn't fit with my this New York session, then I can find setups in the Asian session or late night New York session. to have the same thing. So that's what gives me flexibility to trade too. Otherwise, I trade this too. This is the one of the best thing to have. All right. I hope the thing is clear of choosing your pair. It depends on your trading session. But if you're trading a New York session, I would suggest Euro USD or GBP USD in your very beginning. Otherwise, you can trade futures, Nasdaq or S&P 500, something like that. Is it clear? Let me know in the comments. We would jump into next topic. Just let me know if it's clear what pair to choose. I don't think there is any greater pair than this combination. It gives me literally everything. I can trade anytime. I can trade only New York session. I can trade very pretty good structure, clean. All right, so next topic. Next topic is choosing prop firm. So as you know, there is prop firm business. They make money by losing traders. When traders lose, they make money. So you have to choose a genuine prop firm that wins only when you win, just like 5%. So I have researched a lot about it and I'm going to explain a lot. Just let me open a thing. All right. So a lot of people use funding pips in the very beginning of my journey. I also like this, but when I learned about A book system or B book system, I just switched to fibers. Alpha Capital is also good. E8 market is also good. Marvin is good, but I don't like it because they have even spreads on Euro USD. And yeah, I forgot to add that. Euro USD, you have the literally almost zero spread. That's why you have cost to cost your SL, cost to cost your TP. So it is very good. That's why I trade. And also Nasdaq has very less spread, but gold has a high spread because of less liquidity. That's why it's also volatile. So that's why you should go with Euro USD. Anyway, let's get back to choosing prop firm. FTMO is also good, but not available for Indians. You can choose these prop firms like Fivers are in the game since 9th year, and FTMO in the game is 10 year. It's been so these two are good. Alpha Capital is also good. It's new. IC Markets is good. Funded Next is B book system, but they are paying well, but I don't like it. But after Fivers, I think Funded Next has a place for me because they has the highest amount of funding, like 4 million, like Fivers. These two only offers 4 million funding up to, but Funded Next don't allow you to copy trade your other prop firm accounts. You can copy trade your own accounts, but you cannot copy your other accounts. But Fivers let you do that. So that's why I like Fivers. Like you can copy trade across your own personal account, own Fivers account, and any other prop firm account if the other prop firm account allows you to do so. That's why you have to research. Do not just jump on any prop firm that has a low price or whatever they market you to purchase their challenge. Do your research. At least it should be hybrid or A booking, because B booking is they lose when you win, and they win when you lose, but that's not how you're going to manage your profession, right? So you need a supporter. When you win, they win, just like this or this. So this is what Profum is. I don't support funny peeps. They have pretty much very much rules that can make you lose. And 5%ers are very rules free. So you have to check out other professions. All right. I'm not saying to go with 5%ers, but it's my own research and suggestion. So you should do it too. Having your own research is much better. All right. So this is also done, Profum thing. And should I show you that copy trader that you can use to copy your trades? I can just show you. Uh, this is a site which can give you a copy trading tool. It's free for two accounts. You can freely use two account copying each other. And it's actually not cloud based. It's on your own terminal, so the execution would be very fast. So you can check out. If you want to know more about it, you can go on YouTube and search about FX Blue personal copy trader. Sorry, trade copier for MT5, MT4, whatever the account you can cross manage, even MT4 to MT5. It depends on you. All right, that's all. You understand? And we don't have much more to say. The last thing would be mindset. Let me know if you're done with this one. We'd understand the next thing. All right, did you guys understand it? So as I said that the psychology, you need to know that what it did. So it did market structure shift in the London session, so it's going to continue in the New York session. That's what it happening. You see that? This is actually silver bullet model. Okay, understood. All right. Mindset is pretty clear, like do not gamble like you used to do, be professional. It's just imagining yourself like if you were uh someone who is managing a big fund of investors, what would you do? You wouldn't take multiple trades a day, right? You wouldn't try to find setups every day because it doesn't form. Setup doesn't form every day. This is continuing today. Someday it might be it ranging, accumulating. That's what it is. So you have to project your future self to do like what are profitable. If you were profitable managing a very huge fund like $1 million, how would you do the things? Like you would follow your rules, you would have your plan, you would have your strategy, you would have your risk management, you know what pair to trade, you know what session to trade, why, and all that stuff. You wouldn't be doing random things like you were seeing price to go down. You would just open your trades and put your stop loss at random places. You do not do that. You would be planning everything even before entering on a trade, right? That's what the mindset is. It's trading is like simply like cooking. If you use the same ingredients, same things, and same time cooking that, you would have the same dish. As simple as that. So it's nothing like rocket science. You know things are working, you just need to practice. And one thing is you should change your perspective from making money to being a good trader. Making money would be a byproduct. Like if you focus on practicing kung fu and your focus is into being the best kung fu guy, like martial art guy, then you would be practicing it. You would be training every day, following the all the things that it takes to be. That's all, and you would be defeating all the players. That's a byproduct thing, winning. Just like the same thing as trading. You do the same thing. That's a byproduct that you get in return. You don't have to trade much. You just have to be disciplined, so you don't lose much. You don't have your control to move the price, but you have your control when to put your risk and not lose intentionally or like without any purpose. I don't even get entered if I don't see a reason that my TP would get hit or not. If I know that my TP would get hit, there is space for price to move, I enter, otherwise I don't risk. Yeah, it doesn't mean that I don't make mistake. I do as a human, and also I'm a very beginning of my journey, but I try more. I do not risk much. I take only one trade a day. You have never seen me taking more trades, a lot of trades. I just avoid it. Even since the day I started live stream, I have improved a lot. That helped me. I have seen and rewatched my own life, seeing what was my emotions and what mistake I made. That's how I learned it. I hope you understand. So there is literally everything you need to know in ICT concept. That will tell you that where the price is going and where to take entry. Just let me show it. Right. So this is called um, standard deviation. So what did I mark? I marked that Fibonacci from the low to the high of the market structure. Then as you know about Fibonacci trading, if you know about it, then 61.80 or 62 to 79% is the golden zone for selling. It is a overbought or oversold depending on the context of the specific dealing range. So there is overbought, so it's obvious that smart money would sell. So that's like that. They sold, but where? Till there, one deviation, double the range. The range from here to here, which is double that. Like from here to here, which is double that, right? That's all. You see that? This is perfect. So when you know where is price going, how much would it go? That's all. What else do you need, bro? And let me show you that my risk management, my entry would be on here, right? I raised 10 pips, which is 1% of my capital, and 1:3 is 30 pips, right? We did hit 1:3 here. Easy. Inside that kill zone, the same thing. Like if you even do the same thing for this one, like we have breakout structure here too, but it did not retrace that much. But if we catch this, the same deviation rule, sorry, here to here, because we are in the kill zone, we take trades only in the kill zone. Then you see that it's a one pip away from that golden area, but that not um like it doesn't touch that or something. It depends on the broker. Like let me just show you example. Uh, this is, yeah. As you can see, this pair, this broker didn't sweep that high. So it's depend on the broker, all right? So they move a little bit price above or less just to confuse people. So it depends broker to broker. It doesn't mean that price did not touch. It did touch. Sometimes because of spread, it happens, all right? I hope you understand all the things. There is very advanced tools that you can use. So you just have to learn it, practice it, and just become that person to manage that. Oh, it's nothing hard. Everything is there. If you do the same thing, it's going to happen the same thing, just like cooking. All right. Let me know if you did understood everything, and if you wanna rehear anything, just let me know. All right, everyone understand everything, I think so. Don't you guys have any questions? If you have, you can ask for it. All right, I think we are done. That's all then. If you missed anything, just rewind this and watch it back. That's all. And till then, good trading journey to you. Stay disciplined, stay hard. And I would be trading from tomorrow. As you know, I don't trade Mondays. That's all I said, everything my plan. And let's go, let's do it live. You're gonna see someone how they did from nothing to everything. That's all, boys. Have a nice day. See you tomorrow at the same time, 7 p.m. or 9:30 a.m. New York time.